U.S.-China tensions heating up as China pushes back against President Trump's claim that the country violated its side of the trade agreement and instead accusing the U.S. of violating its trade terms. Joining us now for more on the outlook for negotiations, we've got Tim Brightbill, Wiley Rein partner. Tim, great to speak with you this morning. Talk to me about this tit for tat between the U.S. and China both accusing each other of the same thing. Is there any merit to that? Is this just negotiation and the art of the deal? Where does this sit with you?
Thanks for having me this morning, Madison. I think there are things going on both sides here. The United States and China both have some accurate statements that they've made. The Trump administration is clearly frustrated with China, that it's not living up to the May 12th agreement, and in particular, that it's slowing down access to rare earth magnets and other critical minerals, which are needed for so many different segments of manufacturing. Now, MOFCOM, of course, has pushed back and said that it's the United States that is escalating the situation, first with restrictions on the sale of chip design software to China, and then also some of the other issues, such as the announcement to revoke visas of Chinese students. So I think both sides make some valid claims. It's mostly negotiations, but we do want to see these discussions move forward, given the size of the tariffs that have been suspended between the two countries.
And talk to me about what that looks like. What would be the impetus to make these negotiations move forward? Are you seeing any signals of further discussions happening?
I think both sides are very interested. So, yes, I think there are signals of more discussions. There will be other opportunities going on. There is an OECD meeting this week. This is a high priority for the administration, for Ambassador Greer, but there's a lot of ground to cover and a lot of very hot button issues between the two countries. So not clear how quickly it will be resolved.
And David Sachs over the weekend talking on his podcast about how it would be great if the entire world had to rely on the U.S. tech stack going forward here. But the problem with that is that would require less restrictions on China. So which is it from this administration? Do they want the entire world relying on U.S. tech, which would, of course, be good for NVIDIA, or do they want restrictions on China that would disallow that from happening?
I think so far the restrictions on China are a higher priority. I think there's just great concern that the export controls and other limitations, licensing requirements put in place over the years have not been sufficient to stop China's rise in these areas, whether it's semiconductors and other sectors. So I think the restrictions are going to play a key role going forward. And somehow the two countries are going to have to reach an agreement, even with those restrictions in place.
And my guest host, Jay Woods, has a question for you, Tim.
Hey, Tim. Speaking of reaching an agreement, we have two big egos battling. What do you think it's going to take for them to both declare a victory and to come out looking good? Because right now, the rhetoric is really starting to heat up. And the more it heats up, I think the more damage it could do to the markets.
I think that's exactly right. What's at stake, though, are these huge tariffs up to 145% before cooler heads prevailed and those tariff increases were suspended for 90 days. I think both sides understand that it's in their interest to not have those sky-high tariffs take effect, but there are an awful lot of issues on the table to be resolved between now and then. And it's going to take some movement from both sides, likely, before something moves forward. I mean, China is a different country from where it was during the first Trump administration. It is going to play hardball. The United States is ready for that, but it's going to take some movement by both in order for a deal to occur, I think.
And Tim, speaking specifically about NVIDIA, are they able to work around the current legislation in terms of chip curbs to be able to access what CEO Jensen Huang calls that $50 billion market in China? Or are these restrictions so intense that they will not be able to do that?
That's somewhat unclear. I think the restrictions are much more comprehensive than they have been. But at the same time, we get reports that some companies are still able to do what they need to do. So it's unclear. I think the administration is trying to tighten these up as much as possible. It doesn't want to cede growth to China, especially in these high-end semiconductors.
Yeah.
But it's not clear whether they're effective or not.
And Jay, I want to bring you in here. If NVIDIA can't access the Chinese AI market, how big of a headwind would that be for them going forward?
They've navigated it well. They took that $8 billion charge just last quarter. Jensen will find a way, but this is not the way ideally he will. The growth will still be tremendous. The spend continues to be big on CapEx from the Mag 7 stocks that use its product all the time. But this would make the road for this stock to break out and go another nice leg higher much easier.
All right, Jay, thank you so much. And a huge thanks to Tim Brightbill for joining us this morning as well, Tim. Really appreciate it.
Thank you.